achievement is that kids think that's pretty good. His speech title is Purchase Options in Real Estate. It's speech number 2 for the CC manual. And his own personal objective of this speech is to slow down. It's 5 to 7 minutes. He'll come just a moment.
What does it mean to be able to own a home? It has been said that the dream of the last generation was to be able to pay off their mortgage, and the dream of the next generation is to be able to get one. The world of real estate and home ownership, it's changed in recent years as the real estate market has depressed. By a raise of hands, who in the audience currently owns a home? And still raising your hands, of those of you that own a home, actually live in the home that you own. Excellent. Remember and write down this phrase, special financing terms. Special financing terms. So what does special financing terms mean? Well, special financing terms is an alternative way to buy real estate where you don't have to go through a bank. Many people in life have had hiccups. Who can relate to hiccups in life? I don't mean the kind that are in your gut, I mean the actual hiccups in life. Maybe a job loss. Maybe you've been downsized, upsized, or resized at work. Maybe you've had a medical condition in your family that left you with a lot of medical bills and damaged credit. But the lending world out there today, you must be a very good candidate in order to be able to purchase a home. For most, that means you're either well qualified and you can buy a home, or you're left renting a home. But with special financing terms, we're able to solve the quandary that many people find themselves in. You have rent-to-own, lease purchase, owner finance, or seller finance as options of ways to buy a home. Rent-to-own and lease purchase, many people confuse the definitions or cross them over, but with a rent-to-own or lease purchase, typically you need 1 to 5% down as a down payment. You're going to have your monthly payment, and a portion of that monthly payment is going to be credited to you in equity, building up a future down payment or paying off the principal of the home that you're purchasing. With owner finance or seller finance, it's a way that a seller is able to sell to you their home and act as the bank. So we have Mr. Wells Fargo or Mr. US Bank or Mr. Bank of America, and instead you're dealing with Mr. John Smith or Mr. Ryan Tuttle, and they act as the seller and as the bank to you as the buyer. So owner finance, you typically need, seller finance, you typically need at least 5% down. You make traditional monthly payments to the bank, which being the bank Ryan Tuttle or John Smith, and you're able to qualify to purchase a home without going to a traditional lender. A couple of examples. I'll use names that don't apply, but Rose and Donald. They are living in California, and they are moving to Utah because of a job transfer. At least that's what most Californians say, why they have to move to Utah. They're moving to Utah, and they have a home in California. Like many people that purchased a home or refinanced a home in the last 3-4 years in California, many areas have seen a 50% depreciation in the home values, leaving Rose and Donald in a very difficult situation when the job transfer came to Utah. Coming to Utah and looking for real estate, they fell upon special financing terms where they could buy a home without having to qualify at the bank because they already had another mortgage, and that mortgage that they had was very, very overvalued for the price of the home, which meant that they couldn't sell their property and get out from underneath it. They may end up in a short sale or foreclosure situation, damaging their credit and ending up with a hiccup in life. They still make good money, they're still good people, they can afford the payments that they've made, but because of a job transfer, they have to relocate. With special financing terms, they're able to buy via lease purchase or seller finance in this situation. And with a $15,000 down payment, the seller sold them their home while they work out their situation and have time to be able to qualify for that home here in Utah. Thus avoiding being renters and stuck in the rental trap and being able to continue on with home ownership. Another example is, I'll use an anonymous name, the Morgans. The Morgans owned a home in Highland, Utah, in the insurance industry the last number of years, making a lot of money, feeling that this was the new norm. Bought $1 million home, living in that home, enjoying life, only to be downsized with the insurance industry and not be able to afford the mortgage payments. Ending up in a foreclosure, damaged credit, but he still makes good money as an insurance agent, still does well in the financial services industry, and through special term financing, $5,000 down was able to purchase a home via a lease purchase. Each of these families were very, very grateful for special financing terms and not being stuck in the rental trap. Now, in today's day and age, you need to be creative. You need to have a good job, good income, and a good plan for your future in order to buy a home with special financing terms. And the dream for the next generation can really be to be able to get a mortgage and pay it off.